Hi all, thanks for tuning in and welcome to this update on ARC transactions that have happened over the last week. In this video, we'll talk about the biggest purchases and sales that ARK Invest has made in that week of the 28th of June 2021, and we'll do it in under 5 minutes. As always, this video is not investment advice, so just a presentation of what's happening. So let's get to it. The big buys, number one was Uipath at $105 million. Kathy has been aggressively stepping up her purchase of Uipath, and it's now in her top 20 stocks. At number two is China-based Kanzhun. She has just opened her account here, and their portfolio is still under $50 million. And number three, it's Ionis Pharma. ARK already owns a fair bit of this company, around $350 million, or about 6% of the company. These three purchases accounts for about 70% of all the purchases that was made last week. The big sales, nothing in here that sets off any immediate alarm bells. Number one was Palantir, but it still is in their top 25 and they have a $670 million portfolio. This sale is about 2% of that portfolio. At number two was Roku, again still a top 3 holding for ARK Invest, and the sale amount was tiny compared to the $1.8 billion that still remains in that portfolio. At number three, it's Raven. Now we know that ARK has been exiting out of Raven for quite some time now, and now they have just under $50 million in that stock. Perhaps something to do with the recent news that they'll be acquired by CNH Industrial. So with that summary out of the way, let's do a mini deep dive into the top 3 stocks that she's buying. First up, it's Uipath. Now they've made a $105 million investment over the last week. So Uipath are a software company that focuses on robotics process automation, or RPA, and they are a clear leader in this segment. They're perfectly posed to helping companies reduce costs by automating tasks for them. The stock is down around 22% from their all-time highs of around $90. They have had a ridiculously impressive growth story, and customers have been flocking to them. They have about $360 million in revenue and over 6,000 customers across all segments. But at a $36 billion valuation, it's still pretty expensive at about 60 times price to sales ratio. The big risks for them is around competition. They face competition from big names like SAP, Microsoft, ServiceNow recently acquired Element AI to grow in this segment. Then you have pure play RPA companies like Automation Anywhere, Blue Prism that can up their game further. Many analysts put this as a buy with a 15 to 30% upside over the next 12 months. I mean, the RPA market is expected to grow double-digit figures between now and 2024. Uipath are very expensive, but with a massive market opportunity, maybe worth a punt. Number two is Kanzhun with a $38 million investment over the last week. Now, this is a $15 billion business and a household name in China. They're the largest online recruitment platform with about 25 million monthly active users. They operate a direct recruitment model, which uses artificial intelligence and big data analytics to connect job seekers with employers. They essentially make money by charging companies for value-added services like paid postings, messaging tools, etc. Now, the stock has more than doubled since its IPO in early June. They are a market leader in the online segment, and their revenue is just around 1% of the estimated market size in China. So they're definitely going to benefit from a structural shift to online recruitment platforms. On the other hand, they're still unprofitable. Most of the money goes into sales and marketing, which accounts for nearly 70% of their expenses. Now, that's not necessarily a bad thing because they're trying to grow their user base. The big risk, however, is that someone comes in with a better matching technology and takes share away from them. Maybe worth a small punt, but nothing more. Finally, it's Ionis Pharma with a $23 million investment over the last week. Now, this is a biotech company that develops RNA-based therapeutics. The stock has been volatile over the last few months. I mean, it's still down 35% since its pre-COVID highs of $62. They touched those highs again back in February of this year, but seem to have oversold since then. One of the catalysts for this was because one of their partners, Roche, dropped their drug to treat Huntington's disease, likely because of low efficacy. That said, they still have a number of products being developed for various cancers, genetic diseases, and so on. Analysts reckon they're a moderate buy with a 45 to 110% upside over the next year, which is pretty tasty. I mean, I reckon they're fairly unique in a big market, but tad too risky for my appetite. Well, that's it. I hope you found that useful. If you did, please do consider subscribing and smashing that like button.